In this video, we're going to discuss the financial requirement as it relates to UK spouse and partner visas. As an OISC-regulated UK immigration law firm that has helped more than 4,000 partners with their UK partner visa applications, we're very well placed to discuss this. If you're preparing and submitting the applications yourselves, this is certainly something that you want to focus on, as the financial requirement is the most common cause for spouse and partner visa refusals. We will start by discussing some important general financial requirement principles that partners often overlook. Firstly, unlike the genuine relationship requirement, the financial requirement is an objective standard. In other words, it is largely a box-ticking exercise to not only show that you earn enough money or have enough cash savings, but also that each of the document-specific immigration rules are met. An application that evidences employment income of £1 million per year is as good as an application which evidences employment income £1 above the required amount. And being able to evidence a very high income will not make up for not satisfying the other requirements, such as the relationship or accommodation requirement. Also, where one source of income satisfies the financial requirement alone, it is not necessary to evidence other sources of income. In fact, doing so will only increase the requirements that you will have to familiarise yourself with, as well as increase the number of supporting documents that you will have to provide. Another thing worth noting here is that the only time that the financial requirement needs to be met is when the application is submitted by paying the Home Office fee, which is known as the date of application. So if you rely on employment income and cash savings to satisfy the financial requirement, but then quit that job and spend all of the cash savings one day after submitting the application, this does not technically affect the application. Furthermore, you'll be glad to know that you do not need to calculate the amount of income that is being included towards the financial requirement exactly. The Home Office will not penalise you because you calculated your income differently than what the Home Office guidance states, as long as your income satisfies the financial requirement in accordance with the Home Office guidance and immigration rules. With this being said, please do not get too complacent about this, because how the income is calculated in the financial requirement is certainly not always intuitive. We will now focus on three very important aspects of the financial requirement. Firstly, we'll discuss the level of income you will need to meet the financial requirement. Secondly, we'll discuss the requirements for each of the different sources of permitted income. And thirdly, we'll discuss exactly how you can calculate the income in accordance with the immigration rules and Home Office guidance. So, how much income will you need to satisfy the UK spouse visa financial requirement? For applicants making their first application on a partner route on or after 11th of April 2024, the starting point is that the minimum income threshold will be the relevant minimum income threshold in force when the application is submitted. As of 11th of April 2024, this is £29,000. It has been stated that this £29,000 figure will increase to £34,500 at some point later in the year, a date of which is yet to be specified, and then to £38,700 in early 2025. Whilst the £29,000 figure will not be affected if there are dependent children applying, the £29,000 minimum income threshold figure will not apply if one of the following is received. Instead, the application must satisfy the adequate maintenance test, which is discussed on our website, migrate.org.uk. It's also worth noting that, regardless of whether the minimum income threshold is £18,600, £29,000 or otherwise, the figure will always refer to a gross figure, i.e. before tax, if the application is evidenced correctly. What about partner visa extensions or indefinite leave to remain applications submitted on or after 11th of April 2024? Just so we're on the same page, we're now referring to applicants who submitted their first application as a fiancé, proposed civil partner, or a partner before 11th of April 2024, who are applying with the same sponsor, and who were granted permission on the 5-year route to settlement, which is almost always the case. The starting point is that the £18,600 minimum income threshold will apply. So, for example, Peter submitted their first spouse visa application on the 1st of April 2024 by paying the Home Office application fee on the online application website. The spouse visa was granted on the 1st of June 2024, and so here the date the application was granted is not relevant, since the relevant date is the date the application was submitted. The starting point is that the minimum income threshold when extending the partner visa and or applying for indefinite leave to remain will be £18,600. Again, if one of these is received, the standard minimum income threshold of £18,600 will not apply. Instead, the application must satisfy the adequate maintenance test. The £18,600 minimum income threshold figure will also change if dependent children are applying. Here is a table which shows how this will affect the minimum income threshold figure. You'll note that the maximum minimum income threshold figure here will be up to £29,000. Another thing worth noting here is that you do not necessarily need to rely on income to satisfy the financial requirement, since cash savings can be used to satisfy the financial requirement. Cash savings can 1. Meet the minimum income threshold alone, 2. Be combined with other sources of income to satisfy the minimum income threshold, or 3. Be completely disregarded if another source of permitted source of income meets the minimum income threshold. Even though cash savings are not inherently an income, as we will discuss later, the Home Office will follow a formula to create a gross annual income equivalent figure. So hopefully you now have a better idea regarding how much income you will need to show. Let's now discuss the various sources of permitted income that you can include, as well as how to calculate that income. When discussing the various sources of permitted income, we will refer to categories A to G. Despite the online application form not referencing the word category once, you really should know what category or categories your income falls under. This is because each category has different requirements, calculations, and require different documentation. Regardless of what category you rely on, if you rely on income or cash savings in a foreign currency, this will be converted into pounds sterling using the spot exchange rate which appears on www.oanda.com on the date of application, unless 1. You're relying on Iranian rials, which will be converted into pounds sterling using the monthly FCDO consular exchange rate applicable on the date of application, or 2. You're relying on a currency that does not appear on oanda.com, which is currently only Syrian pounds, in which case it will be converted using the monthly FCDO consular exchange rate on the date of application. We will provide a link to the monthly FCDO consular exchange rate figures in the YouTube description box. We will now discuss category A, which is the category for including non-specified limited company employment income towards the financial requirement. We will elaborate on what non-specified limited company means, so if you're unsure, this should soon become clear. Category A is split into 2 categories. 1, where the employed partner is residing in the UK, and 2, where the sponsor is residing outside the UK and is returning to the UK with the applicant. The calculation and requirements slightly vary if you're relying on the sponsor's employment income, where the sponsor is residing overseas and is returning to the UK with the applicant. In such a case, the overseas-based sponsor will also need to provide a job offer in the UK that satisfies the minimum income threshold, whether alone or in combination with other sources of permitted income. This video will discuss the calculation and requirements where the employed partner is residing in the UK, since that is by far the most common type of employment income relied on. On this point, if the employed partner is a UK seafarer who spends most of their time at sea and who qualifies for HMRC Seafarers Earnings Deduction, they will normally be considered to be resident in the UK for the purpose of assessing the financial requirement. Let's discuss the Category A requirements. The first requirement to note is that the person must be employed. Whilst this may seem obvious, it is sometimes the case that, upon further inspection, those who initially said that they're employed are technically self-employed. We won't elaborate on this too much here, since this mistake is only made by a few partners, but if the person does not receive payslips that reference PAYE, or an overseas equivalent of PAYE, you should familiarise yourself with the difference of being employed and self-employed. An exception here is those who are subcontractors under the construction industry scheme who can choose to employ their self-employment income as employment income under Category A, if the specific documentary requirements are met. The second requirement is that the employer must not be a specified limited company. If the employer is a specified limited company, the requirements are different, the calculation is different, and the required documents are different. A specified limited company is not the same as a limited company. They are completely different. A specified limited company income is included under Category F or G, not Category A. A specified limited company is something that is defined in the immigration rules as a limited company that is registered in the UK, and the person whose income you are relying on is an employee and/or director of that company, and the applicant, sponsor, or family members of the applicant or sponsor hold shares in that employing company, and any remaining shares, not including the applicant, sponsor, or family members of the applicant or sponsor, must be held either directly or indirectly by fewer than 5 other persons. I tried to stress each of these ands because all of these need to apply for the employer to be a specified limited company. For example, if the company is registered overseas, it will not technically be a specified limited company. With this being said, you should be prepared to explain this to the Home Office caseworker, as this is a point that is sometimes overlooked by them. You can do this by copy and pasting paragraph 9 of Appendix FMSE, which specifically states that the UK company must be based in the UK. If the applicant, sponsor, or family members of the applicant or sponsor do not hold shares of the employing company, that company cannot be a specified limited company. If shares are held, but there are more than 4 other persons that hold the remaining shares, it will not be a specified limited company. If the employing company is a specified limited company, we discuss this later in this video when we discuss Category F. If, at this point, you're still unsure whether the company is a specified limited company or not, we discuss this further on our website, www.migrate.org.uk. The third requirement is that the person must have been employed for 6 months or longer when the application is submitted. If the person will have been employed for fewer than 6 months when the application is submitted, you should then look to Category B. And this is the case even if the employment will have been held for longer than 6 months when the applicant attends the visa centre, since the important date is, again, the date the online application is submitted. Fourthly, applicants can include their employment income if they're in the UK and working legally. The implication of this is that for out-of-country applications, applicants cannot include their employment income towards the financial requirement. This is the case even if they earn a lot overseas or have a job offer in the UK. For in-country applications, this means that most applicants can include their employment income towards the financial requirement. Sponsors, on the other hand, will always be able to include their employment income towards the financial requirement. It is also worth again emphasising that the relevant date that the requirements must be met is the date the application is submitted by paying the Home Office fees. This is called the date of application. If the employed person stops working after submitting the application, this is technically irrelevant to the application, since the requirements must only be met when the application is submitted. So what is the Category A calculation? The first step is to identify whether the employment is salaried or non-salaried. Salaried and non-salaried employment income is calculated completely differently, and so this is particularly important to identify. Salaried employment normally involves the employee receiving a contractual fixed basic amount per year, such as £22,000 per year. In addition to the fixed basic amount, the employee can earn overtime, bonuses, commission and the like. On the other hand, non-salaried employment normally involves the employee receiving payment based on the hours or days worked, for example £17 an hour or £350 a day. In addition to the standard pay based on the amount worked, non-salaried employees can receive commission, bonuses and overtime. The salaried-non-salaried distinction is not always clear-cut, but payslips are often very helpful here. This is an example of a salaried payslip. This payslip shows a basic monthly pay of £3,213.46 and a bonus of £1,466. The basic monthly pay figure here, which again in this payslip is £3,213.46, tends to stay the same month after month until the employee receives a pay rise or pay cut. The bonus figure here tends to vary month after month. This is an example of a non-salaried payslip. Here you can see the words hourly pay, and importantly, the other payslips that cover the 6 months before submitting the application show that this hourly pay figure varies month after month. To calculate salaried employment income under Category A, first gather the payslips that cover the 6 months before submitting the application. Then identify the payslip that shows the lowest total gross pay. You can take into account the basic pay, overtime, commission-based pay, payments to cover travel time, bonuses, and skills and UK location-based allowances. For example, using this example here, since we're concerned about the total gross pay, the relevant figure here will be £4,679.46. We are not concerned about the PAYE and national insurance deductions, and we are not concerned about the net pay. You should then multiply the lowest total gross pay figure by 12 if the payslips are monthly payslips, or by 52 if the payslips are weekly payslips. Since this is a monthly payslip, £4,679.46 multiplied by 12 is £56,153.52. Therefore, if the visa application is evidenced correctly, this £56,153.52 figure is the figure that can be relied on to satisfy the financial requirement. If the figure that you reached here is above the minimum income threshold, all is well. If the figure you reached here falls short of the minimum income threshold, you can use the longer calculation method to see if the minimum income threshold is met. And this relates to the earlier point that, whilst you must ensure that the minimum income threshold is met, you do not ordinarily need to calculate the exact amount includable. First, multiply the lowest total basic gross pay, as seen in the pay slips covering the 6 months before submitting the application, by 12 if monthly pay slips are received, or by 52 if weekly pay slips are received. Going back to this pay slip, this will be the £3,213.46 figure, not the £4,679.46 figure. The figure that you reach here will be the gross annual basic salary that can be included in the financial requirement. The second step is to total the overtime, bonuses, commission-based pay, payments to cover travel time, and skills and UK location-based allowances as shown in the pay slips, which cover the 6 months before submitting the online application. Step 3 involves dividing the figure reached in step 2 by 6 and then multiplying this by 12. And then step 4 involves adding this figure to the gross annual basic pay figure reached in step 1. Again, most partners can skip this more convoluted calculation, since it will only be in a tiny minority of instances where the first calculation discussed will not satisfy the financial requirement, but satisfied using this calculation. To calculate non-salaried employment income under Category A, the first step will be to gather the payslips that cover the 6 months before submitting the application, and then total the gross amount received. Here you can include the standard basic pay, for example the £17 an hour, commission-based pay, overtime, payments to cover travel time, bonuses, and skills and UK location-based allowances. For example, this table shows the total monthly gross pay as seen on the monthly payslips that cover the 6 months before submitting the application. These 6 figures total £17,000. Step 2. Divide this figure by 6, regardless of whether the payslips are issued weekly or monthly. £17,000 divided by 6 is £2,833.33. And then finally, step 3 will require you to multiply this figure by 12. £2,833.33 multiplied by 12 is £33,996.96. It is this figure that is the amount includable as non-salaried employment income under Category A. If maternity, paternity, adoption or sick pay has been received in the 6 months before submitting the application, there is greater flexibility regarding the calculation of the gross annual income that you can include towards the financial requirement. In such a case, you'll be able to choose the relevant period for calculating employment income to be either the 6 months before submitting the application, as is standard, or the 6 months before the commencement of the maternity, paternity, adoption or sick pay. We discuss this in more detail on our website, migrate.org.uk. Category A employment income can be combined with other Category A employment income. For example, if the person is employed by 2 employers, both of whom have employed the person for 6 months or longer when the application is submitted, employment income from both employers can be included. Similarly, for in-country applications, if both the applicant and sponsor are employed for 6 months or longer when the application is submitted, the applicant's and sponsor's employment income can be included under Category A. It can be combined with non-employment income under Category C, cash savings under Category D, pension income under Category E. We discuss these other sources of income later in this video. Category A employment income can also be combined with specified limited income and self-employment income as a sole trader under Category F. However, this will change the calculation and relevant period for including the employment income. We discuss this later in our video when we discuss Category F incomes. Category A employment income cannot be combined with Category B employment income. In such a case, both employment incomes must be included under Category B. We will now discuss non-specified limited company employment income in the UK under Category B. Like Category A, Category B is split into 2 categories. 1, where the employed partner is residing in the UK, and 2, where the sponsor is residing outside the UK and is returning to the UK with the applicant. This video will discuss the calculation and requirements where the employed partner is residing in the UK, since that is by far the most common type of employment income relied on. In short, Category B is for employees who have been employed for fewer than 6 months when the application is submitted. It is also for employees who will have been employed for longer than 6 months when the application is submitted, but do not meet the financial requirement under Category A. Again, if the financial requirement is met under Category A, feel free to ignore Category B. The Category B requirements, for the most part, are similar to Category A. First, the person must be employed. Second, the employer must not be a specified limited company. Third, applicants can include their employment income if they're in the UK and are working legally. The implication is that for out-of-country applications, applicants cannot include their employment income towards the financial requirement. The main difference between the requirements for Category A and B is that, unlike Category A, there is no minimum length of employment requirement. There are 2 tests that must be satisfied under Category B. If you only meet one of the 2 tests, then unfortunately the financial requirement will not be met. The first test that must be satisfied is that the current gross annual income from employment must equal or exceed the financial requirement that applies. We use the word current because here we're only concerned about the gross annual income that is being received when the application is submitted. This gross annual income calculation varies depending on whether the employment is salaried or non-salaried. For salaried employment, you should multiply the total gross employment income from the most recent payslip that is being submitted before the submission of the application by 12 if monthly payslips are issued, or by 52 if weekly payslips are issued. For non-salaried employment, you should follow the following 3 steps. Step 1. Total the gross employment income received since employment started up to a maximum period of 12 months. Step 2. Divide this number by the number of months if monthly payslips are issued, weeks if weekly payslips are issued, or by days if daily payslips are issued since employment started. Again, up to a maximum period of 12 months. Step 3. Multiply this figure by 12 if monthly payslips are issued, 52 if weekly payslips are issued, or by 365 if daily payslips are issued. The result will be the figure from non-salaried employment that you can include towards the financial requirement in Test 1. The figure in Test 1 can be combined with other Category B employment income, non-employment Category C income such as property rental income, cash savings under Category D, and pension income under Category E. The second test requires the person to have received the level of employment income required in the 12 months before the application submission. To calculate this second test, first gather the payslips covering up to the 12 months before the submission of the online application, and then total the gross amount received. Under Category B, you can include basic pay or salary, payments to cover travel time, overtime, commission-based pay, skills and UK location-based allowances, and bonuses. For example, using this payslip, we will add this £4,679.46 figure here. Please note that we're not concerned with the deductions and we're not concerned with the net pay figure. And importantly, unlike Test 1, you can also include employment income from previous non-specified limited company employers in the 12 months before submitting the application. So I specifically use the words up to the 12 months because the employee does not need to have been employed for each of the 12 months before submitting the application. So there's nothing necessarily wrong with there being gaps in employment in the 12 months before submitting the application. Furthermore, unlike Category A, which requires the person to have been employed for 6 months when submitting the application, Category B has no requirement relating to a minimum length of employment. For example, Jane has been employed for only 1 month in the previous 12 months. She receives £480,000 per year, and her first monthly payslip totals £40,000. This payslip meets Part 1 of the 2-part test because it shows that her current gross annual employment income is greater than the minimum income threshold that applies to her. This payslip also meets Part 2 of the 2-part test because this payslip shows that she received more than the minimum income threshold in the 12 months before submitting the application. Part 2 of the Category B test can be combined with other Category B employment income, non-employment Category C income such as property rental income, and the gross amount of pension income received in the same 12-month period under Category E. Importantly, cash savings cannot be combined with Part 2 of the test, only Part 1. So, if you do not satisfy the financial requirement combining employment income under category B with cash savings under category G, partners often get around this by waiting until the employed partner has been employed for 6 months and then combine employment income with category A with cash savings under category D, since there is no such restriction regarding being able to combine cash savings. We will now discuss specified limited company income. The first requirement to include specified limited company income towards the financial requirement is that the company that provides the income must be a specified limited company. We discussed the specified limited company definition earlier on in this video. To quickly summarize this definition again, a specified limited company is where all of the following apply. The company is a limited company registered in the UK, and the person whose income you're relying on is an employee and/or director of the company, and the applicant, sponsor, or family members of the applicant or sponsor hold shares in the employing company, and any remaining shares, not including the applicant, sponsor, or family members of the applicant or sponsor, must be held either directly or indirectly by fewer than 5 other persons. If you're still unsure whether the company is a specified limited company or not, you may want to check out our specified limited company article on our website, which, among other things, provides you with a step-by-step account you can follow to identify whether the company is a specified limited company or not. The second requirement is that the specified limited company must have had 1 full financial year. And this is because you'll be required to provide company-related documentation, such as accounts and business bank statements specifically relating to 1 full financial year. If the specified limited company does not have 1 full financial year, the 2 options are normally 1. Rely on another source of income to satisfy the financial requirement, or 2. Wait until 1 full financial year has passed and then submit the application if the financial requirement is met. The third requirement is that the most recent full financial year should be a 12-month financial year. Whilst UK limited companies normally have a 12-month financial year, there are some cases where the company's financial year is not 12 months, particularly in the first year of trading, as the first financial year can sometimes be shorter or longer than 12 months long. If the specified limited company's most recent financial year is not 12 months, this may be problematic depending on the Home Office caseworker you're assigned, as 12 months is specifically mentioned in the Home Office guidance. Therefore, in such a case, you can 1. Ask the accountant if the accounting year can be changed to a 12-month financial year. 2. Wait until the specified limited company's most recent financial year is 12 months. Or 3. Rely on another source of permitted income to satisfy the financial requirement. Or 4. Submit the application despite the most recent financial year not being 12 months. The most important factor regarding whether this will be problematic or not will again be the Home Office caseworker that you're assigned. If the financial year is fewer than 12 months, this is less likely to be problematic. Whilst if the financial year is longer than 12 months, this is more likely going to be problematic. The next requirement that we will discuss is that there must be ongoing receipt of employment and/or dividend income since the specified limited company's most recent full financial year ended. If you're not able to show that there is ongoing receipt of employment and/or dividend income, for example, if the company has since been liquidated, you will not technically be able to include the income from the specified limited company. The fifth requirement is that if the company is not required to produce annual audited accounts, which is the case for the vast majority of specified limited companies, the company will need an accountant, since you will also need to provide an accountant certificate of confirmation, which is something that we discuss further on our website, migrate.org.uk. We will now discuss how to calculate the amount of specified limited income that you can include towards the financial requirement. Firstly, it's worth noting that in approximately 99% of applications, specified limited company income is included under category F. It can also be included under category G, but since category G involves a lot more paperwork, in 99% of instances, partners can completely disregard category G. The first step to calculating specified limited company income is to identify the specified limited company's most recent full financial year that passed by looking at the CT600 company tax return document. Here is a CT600 company tax return document example. Zooming in, we can see that in this example, the financial year starts on the 1st of April and ends on the 31st of March. So using this financial year as an example, which starts on the 1st of April and ends on the 31st of March, if an application is submitted on the 30th of March 2024, i.e. a day before the financial year ends, the relevant financial year will begin on the 1st of April 2022 and end on the 31st of March 2023. If, however, an application is submitted one day after the financial year ends, on the 1st of April 2024, the relevant financial year will begin on the 1st of April 2023 and end on the 31st of March 2024. So, in a lot of instances, accounts for the new financial year will need to be filed much earlier than what the UK tax rules require. The second step requires you to total the gross amount of employment income that was received in the financial year that you identified in step 1. If the person also received dividend income that was declared during or in respect of the relevant financial year, that income received can also be included. So the words "or in respect of" means that the dividend income does not actually need to have been received during the relevant financial year. Rather, it is fine if it was received after the relevant financial year, but before the application is submitted. Since this goes against the general approach in the immigration rules, which requires the income to be received in the relevant financial period, if you choose to rely on income that was received after the relevant financial year ended, but before the application was submitted, you should make it clear to the Home Office caseworker that this is permitted by citing paragraph 9DI of Appendix FMSE and by highlighting the words "or in respect of." The total of the employment and dividend income, as previously discussed, is the amount that you can include towards the financial requirement under Category F, if everything is evidenced correctly. So, for small business owners, it's commonly the case that the business owner takes money out of the business when and as they need it, and then lets the accountant deal with the accounts and how those payments are labelled. Since it's the accountant's job to make these payments as tax efficient as possible, we commonly see that they can be creative and label payments as something other than salary or dividends, such as the repayment of a director's loan. The amount of employment and dividend income you're relying on should be made clear in your application, as it is only these two types of income that can be included in your application. If the financial requirement is met under Category F, feel free to ignore Category G completely, as it involves submitting much more paperwork. Whilst Category F is based on the company's most recent full financial year, Category G is based on the company's two most recent full financial years and not only requires documentation relating to 2 financial years, but it will also require you to calculate the mean average of the employment and dividends that was received in the 2 most recent full financial years. What about combining specified limited company income with other sources of income? Specified limited company income under Category F can be combined with non-specified limited company employment income, other non-employment income under Category C such as property rental income, and pension income under Category E. However, when specified limited company income is combined with other sources of income, the relevant financial period for the other source of income generally changes to match the same period as the specified limited company income. For example, this table shows the amount of specified limited company income received. The numbers 13 to 1 here relate to the number of months before submitting the online application. The months 13 up until 2 are highlighted in orange because that is the specified limited company's most recent full financial year, and thus is the amount that can be included towards the financial requirement. Month 1 here will be irrelevant regarding the amount that can be included towards the financial requirement, as it's outside the most recent full financial year. If we total up months 13 to 2 here, this will mean that £15,000 specified limited company income can be included towards the financial requirement. For non-specified limited companies under Category A, the relevant period will generally be the 6 months before submitting the online application. However, when you combine specified limited company income with non-specified limited company income, in this example it will only be months 13 to 2, i.e. the relevant period for this specified limited company income, which are relevant when determining the amount of non-specified limited company income that can be included towards the financial requirement. And this is because when you combine specified limited company income with other sources of income, the general rule is that the relevant period changes to match the specified limited company's relevant period. An implication of this is that other specified limited company and self-employment income as a sole trader, partner, or franchise can only be combined when the relevant financial period is the same. Specified limited company income under Category F cannot be combined with cash savings and sources of income which are not still a source of income when the application is submitted. Continuing with the example of combining specified limited company income with non-specified limited company income, here you can see that the non-specified limited company income stopped becoming a source of income 4 months before submitting the online application. Therefore, in this instance, as the non-specified limited company employment income is not being received when the online application intends to be submitted, the non-specified limited company income cannot be included towards the financial requirement. Let's now discuss other non-employment income. Other non-employment income, which is included under category C, comprises of numerous types of income, a list of which you can see here. Unlike employment and self-employment income, both the sponsor and applicant can include this income towards the financial requirement for out-of-country and in-country applications. Let's discuss the other non-employment income requirements under category C. There are two general mandatory requirements. Firstly, the relevant asset on which the income is based on must be in the name of the applicant, sponsor, or both jointly. Secondly, the relevant asset on which the income is based must be held or owned when the application is submitted by paying the Home Office fees. So if, for example, you want to rely on property rental income but you sold the house that was being let out, that income will not be able to be included towards the financial requirement. This does not mean that the asset needs to have been held for 12 months before submitting the application, however. For example, if the property was held for 5 months before submitting the application and generated rental income for those 5 months, income from those 5 months can be included towards the financial requirement. Each of the Category C sources of income can come with additional requirements which can be found in Appendix FM 1.7 and Appendix FMSE. The general rule for these, an exception being maintenance grants and stipends, is that you can include the gross amount received in the 12 months before submitting the application. For example, regarding property rental income, the amount generally includable is the gross amount of property rental income received in the 12 months before submitting the online application, before the deduction of any management fees. Category C can be combined with employment income under Category A and B, other non-employment income under Category C, cash savings under Category D, pension income under Category E, specified limited company income under Category F and G, and self-employment income as a sole trader, partner or franchise under Category F and G. Please note, however, as we discussed earlier in the video, when Category C income is combined with Category F, the relevant period of the Category C income changes to the Category F relevant period. We will now discuss relying on cash savings for UK spouse visa applications, which is included under Category D. There are 3 different types of cash savings applications. 1, where cash savings have been held for at least 6 months when the application is submitted. 2, where cash savings have been held for fewer than 6 months when the application is submitted, but are the proceeds of a sale of property that took place within the 6 months before submitting the application. And 3, where cash savings have been held for fewer than 6 months when the application is submitted, but there has been a liquidation or transfer of investments, stocks, shares, bonds or trust funds within the 6 months before submitting the application. This video will discuss each of these different types of cash savings applications. Let's first discuss the cash savings requirements that are relevant to all cash savings applications. In all cases, the cash savings must be held in either the applicant's personal account, the sponsor's personal account, or the applicant and sponsor's joint account. So yes, applicants can include their cash savings toward the financial requirement for all applications. The immigration rules, however, do not state that the cash savings can be in the applicant or sponsor's account, which is a joint account with someone other than the applicant or sponsor. So for example, if the account that holds the cash savings is in the name of the sponsors and the sponsor's mother jointly, this does not technically satisfy the immigration rules. The cash savings does not need to be held in British pounds. Rather, the cash funds will be converted using the closing spot exchange rate found on oanda.com on the date that the application is submitted. This is the case unless 1. You're relying on Iranian rials, which will be converted into pound sterling using the monthly FCDO consular exchange rate applicable on the date of application, or 2. You're relying on a currency which does not appear on oanda.com, which is currently only Syrian pounds, which will be converted using the monthly FCDO consular exchange rate on the date of application. The cash savings can be held in a bank or savings account that is a current, deposit or investment account. And this is worth noting because with other sources of income, such as employment income, you are specifically required to provide personal bank accounts, not savings accounts. The cash savings must be immediately withdrawable, with or without penalty. And the implication of this is that if, when the application is submitted, the funds are in the form of a fixed deposit account where the funds cannot be accessed immediately, the fixed deposit account's funds will not be includable towards the financial requirement. The source of the cash savings must be legal, and whilst you need to declare the source of the cash savings, it is generally the case that the Home Office will take your word for it. They will not conduct forensic accounting regarding the cash savings source. The account the funds are held with must be a financial institution regulated by the appropriate regulatory body for the country in which the institution is operating. In the UK, this is the Financial Conduct Authority, otherwise known as the FCA, or the Prudential Regulation Authority, otherwise known as the PRA. The Home Office doesn't list the relevant bodies for the other countries, so if you're relying on an overseas account, it will be your responsibility to ensure that the relevant body is an appropriate regulatory body. And finally, in all instances, you'll be required to provide regular bank or savings statements. Again, understandably, the Home Office does not elaborate on what a regular statement looks like, but in most situations, this should be rather obvious. The statement will need to identify the account holder or account holders and should have an identifiable account number, should show the name of the financial institution and be complete, meaning that the statements will need to show the relevant information required to establish whether the immigration rules are met. And on this point, please do not redact your statements. So, how does the Home Office calculate the amount of cash savings you can include towards the financial requirement? We will start with the standard cash savings application, where the cash savings will have been held for 6 months when the application is submitted. Step 1 involves identifying the lowest total amount of includable cash savings held at one point in time in the 6 months before submitting the application. If you're relying on cash savings held in only one account, this will be rather simple, as you will just need to identify the lowest figure as seen in the statements. If, however, you're relying on cash savings held over numerous accounts, if it's not immediately clear after scanning through the statements that the financial requirement is met, we would normally recommend creating an Excel sheet like the one here, which makes it clear what the relevant figure is. Not only will this make the Home Office caseworker's job easier, which is certainly something that you want to do, but this also helps you ensure that you satisfy the financial requirement. Whilst creating such an Excel sheet which covers each day in the 6 months before submitting the application can seem like an incredibly mundane task, many banks allow you to download statements in Excel format, which will save you a lot of time comparing to manually inputting the figures. The second step will require you to minus the figure in step 1 by £16,000. The implication of this is that if you have cash savings of £16,000 or less, your cash savings will not help you satisfy the minimum income threshold. The final step, step 3, will then require you to divide this number by 2.5, assuming you're applying for a spouse or partner visa and not indefinite leave to remain, where this step is not relevant. The figure that you reach here will be the cash savings gross annual income equivalent figure that can be included towards the financial requirement. To give you an idea as to the cash savings required to satisfy the financial requirement alone, we can look at this table here. The second type of cash savings application is where cash savings have been held for fewer than 6 months when the application is submitted, but are the proceeds of a sale of property within the 6 months before submitting the application. The relevant calculation here is not the lowest amount of cash savings held in the 6 months before submitting the application. Rather, the 6-month period will be reduced by the amount of time that passed between the start of the 6-month period and the deposit of the proceeds of the property sale. So, for example, if the deposit of the proceeds of the property sale was received 2 months before submitting the application, to rely on the cash savings from the sale of property, you will only be required to provide personal bank statements or savings statements that cover the 2 months before submitting the application. If ownership of the property was shared with a third party, i.e. someone other than the applicant and/or sponsor, only the proceeds of the sale of the share of the property owned by the applicant, sponsor, or both jointly can be counted. The third type of cash savings application is where cash savings have been held for fewer than 6 months when the application is submitted, but there has been a liquidation or transfer of investments, stocks, shares, bonds, or trust funds within the 6 months before submitting the application. Here, the relevant calculation is not made using the lowest amount of cash savings held in the 6 months before submitting the application. Rather, just like where there's been a sale of the property, the standard 6-month period will be reduced by the amount of time between the start of the 6-month period and the transfer or liquidation into cash. So, for example, if a stock portfolio, which was held for longer than 6 months before submitting the application, was sold 1 month before submitting the application, to rely on the cash savings from the stock portfolio, you will only technically be required to provide personal bank or savings statements that cover the 1 month before submitting the application. Combining cash savings with other sources of income. Cash savings can be combined with employment income under Category A and Part 1 of the 2-part Category B test, and other non-employment income under Category C, and pension income under Category E. Cash savings cannot be combined with specified limited company income under category F or G, or self-employment income as a sole trader, partner, or franchise under category F or G. Let's now discuss including pension income towards the spouse visa financial requirement, which is included under category E. Firstly, both the applicant and sponsor can include their pension income towards the financial requirement in both out-of-country and in-country spouse visa applications. Secondly, the pension income must have become a source of income at least 28 days before applying. You can include state pension, whether that's from the UK or overseas, and you can also include occupational or private pension. The amount of pension income that you can include is the gross amount that is being received when the application is submitted. In most cases, because there are some exceptions, it is not the gross pension income received in the 12 months before submitting the application. For example, the person started to receive £1,000 a month in the form of a pension annuity approximately 2 months before applying. Since the person receives £1,000 a month, gross, we will multiply this monthly figure by 12 to come up with the gross annual figure, which is £12,000. £12,000 is therefore the amount includable in this instance. The relevant figure will not be £3,000, which is the gross amount received in the 12 months before applying. Combining pension income. Pension income can be combined with employment income under category A and B, and it can also be combined with other non-employment income under category C, cash savings under category D, specified limited company income under category F or G, and self-employment income as a sole trader, partner, or franchise under category F or G. As we discussed earlier in this video, however, when pension income is combined with category F income, the relevant period of the pension income changes to the relevant period in category F. Self-employment income as a sole trader, partner, or franchise under category F and G. The first requirement is that the person must be self-employed as a sole trader, partner, or franchise. If the person owns a UK limited company, that income is ordinarily treated as specified limited company income, assuming there are not more than 4 other persons that hold the remaining shares. We elaborate further on specified limited company income in this video. The second requirement is that 1 financial year must have passed since the person became self-employed. This is because, as we will discuss later, you will need to provide documentation relating to the most recent full financial year that passed, which in the UK is from 6th of April to 5th of April. Thirdly, there must be ongoing self-employment when the application is submitted. This will need to be evidence in the form of a bank statement dated no more than 3 months before applying showing transactions relating to ongoing trading, or evidence dated no more than 3 months before applying of the renewal of a license to trade or of ongoing payment of business rates, business-related insurance premiums, employer national insurance contributions, or franchise payments to the parent company. Fourthly, applicants can include their self-employment income if they're in the UK and are working legally. The implication is that for out-of-country applications, applicants cannot include their self-employment income towards the financial requirement, regardless of how much they earn. Finally, the immigration rules makes a distinction between those who are self-employed in the UK when the application is submitted, and those who are self-employed overseas and will be returning to the UK with the applicant to work. For those self-employed overseas who will be returning to the UK with the applicant to work, will need to provide evidence that 1. That their self-employment income is ongoing and will be continuing in the UK, or 2. A confirmed job offer of salaried or non-salaried employment in the UK starting within 3 months of their return. Let's now discuss how to calculate self-employment income. The first step is to identify the most recent financial year that passed. For those self-employed in the UK, this will be the most recent 6th to 5th of April self-assessment tax return period that passed. For example, if the application is submitted on the 4th of April 2024, just before the financial year ends, the relevant period will be from the 6th of April 2022 to the 5th of April 2023. On the other hand, if you apply on the 6th of April 2024, just after the financial year ends, the relevant financial period will be the 6th of April 2023 to the 5th of April 2024. 2 points are worth making here. Firstly, if the person is self-employed overseas, this period will vary according to the country the person is tax resident in. Secondly, the immigration rules can require the self-employed person to submit their self-assessment tax return period much earlier than what the UK tax rules do. Therefore, if you apply shortly after the 5th of April of any given year, even though HMRC will not require you to submit the self-assessment tax return, the immigration rules unfortunately do. The second step is to identify the gross taxable profits from the person's share of the business in this period, not including any deductible allowances, expenses, or liabilities which may be applied to the gross taxable profits to establish the final tax liability. The easiest way to do this will be to ask the self-employed person's accountant. If they do not have an accountant, you will likely need one to satisfy the immigration rules, depending on your circumstances. It will be this figure that is includable under Category F, if the application is evidenced accordingly. Self-employment income can also be included under Category G. The difference in calculation here is that under Category G, you must calculate the mean average of the two most recent full financial year figures. However, it is very rare for partners to rely on Category G, for good reason. Since Category G requires providing a lot more documentation, relying on Category G is only something that is seen as a last resort if the financial requirement is not met under Category F. Self-employment income as a sole trader, partner, or franchise can be combined with non-specified limited company employment income, other non-employment income under Category C, and pension income under Category E. However, when self-employment income is combined with one of these, the relevant financial period for the other sources of income normally changes to match the same financial period as the self-employment income, which is 6th of April to 5th of April for those self-employed in the UK. For example, the applicant wants to submit the application in June 2024. The applicant wants to combine their partner's non-specified limited company employment income with their partner's self-employment income as a sole trader in the UK. Normally, the relevant period for the employment income will be the 6 months before applying under Category A or up to the 12 months before applying under Category B. The amount of employment income includable will be the gross amount received during the 6th of April 2023 to 5th of April 2024 period. Self-employment income as a sole trader, partner, or franchise can also be combined with other self-employment as a sole trader, partner, or franchise if the relevant financial period is the same, and specified limited company income if the specified limited company's financial period is the same. Self-employment income under Category F cannot be combined with either cash savings or sources of income which are not a source of income when the application is submitted. So, for example, the applicant wants to submit the application in June 2024. They want to combine their partner's non-specified limited company employment income with their partner's self-employment income as a sole trader in the UK. If the employment income stopped becoming a source of income in May 2024, before the application is submitted, the employment income will not be able to be included towards the financial requirement. Let's now address the sources of income that cannot be included in the financial requirement. Firstly, as we discussed earlier, for out-of-country applications, the applicant's employment and self-employment income cannot be included towards a financial requirement. Secondly, the starting point is that income from benefits cannot be included in the financial requirement for UK spouse visas. The exception to this is if the sponsor receives, whether that is on behalf of their child or not, one of the following permitted benefits. As we've previously discussed, if the sponsor does receive one of these benefits, the adequate maintenance test applies, which will only require you to show that your weekly net income, minus housing expenses, is greater or equal to the amount of income support an equivalent British family of your size can receive. Thirdly, loans and credit facilities cannot be included towards the financial requirement. For example, you cannot technically loan £80,000 from the bank and then rely on that as cash savings to satisfy the financial requirement. Fourthly, in nearly all applications, third parties, in other words, people other than the applicant and sponsor, cannot sponsor the spouse visa application just because the financial requirement is not met based on the permitted source of income we have already discussed. For example, a wealthy friend or family member cannot say, "Here are my bank statements showing £1 million, I'm happy to sponsor the applicant's spouse visa application." There are exceptions to this general rule, however. 1. If you have a generous friend or family member who can gift but not loan cash savings, this can be includable towards the financial requirement. You will, however, need to wait 6 months until the cash savings has been held in your account before you can apply relying on the cash savings. For example, on the 1st of January 2024, the sponsor's father gifted the sponsor £200,000 by transferring it to the sponsor's bank account. On 1st of July 2024, 6 months after the date the cash savings were gifted, the sponsor submitted the application. Since the sponsor's personal bank statement shows the sponsor held the cash savings for 6 months, and that the cash savings did not fall below the required level, the financial requirement will be met, if the application is evidenced accordingly. Another exception to the rule that there cannot be third-party sponsorship will apply if there are exceptional circumstances which could render a refusal of the application a breach of Article 8, because it could result in unjustifiably harsh consequences for the applicant, sponsor, or a relevant child. With this being said, it is almost always the case that circumstances are not exceptional enough for the Home Office, as this is a very high threshold. For a detailed account of all of the spouse visa requirements, you can watch our incredibly in-depth UK spouse visa requirements video by clicking the video here. Also, if you found this video helpful, feel free to let us know in the YouTube comments by liking the video and by subscribing.